Good afternoon. We're going to start with a new program, a new show. It's called The Reflections of Winston. On Sundays, talking about a little bit of what happened during the week and what to expect this coming week. A little bit of an editorial and a reflection that we do here at Winston. So I hope you enjoy it, and then you can connect with us. So obviously, it was a week of rates. We've been talking about that, the issue of rates normalizing at some point, going back to around 2% pre-pandemic levels. And the issue that everybody was talking was not so much the absolute level, but the speed on the issue. So clearly, that was what the market's been talking. And we were a little bit wrong because we were thinking that the market was so much focused on the fact that probably was not going to affect. However, after having an all-time high on Wednesday, mainly on the Dow Jones, on the great news that on another blow to the COVID pandemic, with the approval of the recommendation of approval that eventually came on Friday of the Johnson & Johnson one-shot vaccine. And as we speak, about 45 million Americans have been vaccinated, and an uncertain but probably a very large number of people have been infected knowingly or unknowingly. And that's why probably cases are dropping dramatically, not only in the United States, but unfortunately, fortunately, almost everywhere around the world. Even, for instance, in Europe, where they're having some trouble with the vaccinations. And as we all know, Israel is the leading case, with probably 60% of the population now vaccinated or more, and the cases having dropped dramatically, 90% or so. So on those news, the market rallied. Funny enough, the biggest winner on the S&P was Carnival Cruises. Basically, the not work from home stock, as we will hopefully normalize the world. But however, when Chairman Powell spoke on Tuesday, Wednesday in the Congress, he reiterated what he has reiterated and reiterated so many times. Basically, the focus is the economy. We need to look into a full recovery. We're not completely out of the goods yet, which he's right. We might have third waves. We might have mutations on the virus. So he focused on that. Then we will worry about inflation. So, and as we know, we've been having this debate of inflation inside the Democratic Party between Larry Summers and others, that inflation could pose a risk. So the market had this bond reaction with the 10-year rate going from 130 FU to 1.6%. But remember, the market has discounted 8 of the next 2 recessions. The market sometimes does things that then do not materialize. So we think in a way that it's been a little bit healthy, that the market reaccommodates. The Nasdaq corrected around 5%, a little bit over the last 5 days, trading days, less so with the Dow Jones and the S&P, because, as we say, it balanced with other not work-from-home stocks like Carnival, the banks, the airlines, and others that saw some good trading days. So, in a way, we think that's a good stuff that the market moved in that direction a little bit. We are a little bit happy about that. Finally, the other thing that we think is interesting, the big focus on the excess savings. It's about anywhere, about in excess, about close to $2 trillion in the hands of the American consumers. Because, as we say, we didn't commute, we didn't spend so much in clothing, we didn't do this, we didn't do that, we didn't go out, we didn't spend on vacations, so the money is there sitting in the accounts. The question is what we will do once we have the all-clear alarm. Clearly, some of that money was invested, most probably, and we saw that in the markets when you look at the retail brokers like E-Trade, Ameritrade, Robinhood. They got millions and millions of new accounts, 50%, 40% in retail accounts. So some of that money was invested, but this money is in checking accounts. So this money has not been invested yet or spent. So that's why many economists think that we can have a growth rate on GDP this year around 6 to 7%, numbers that we haven't seen in at least my 30 plus years as a banker. Never the U.S. have grown so big. Will that go back to the market with a great rally or not? It's been discounted. We don't know. Like we don't know about this noise with inflation and others. We'll have to wait. As we say, for now, we like it. We like what we see. We like this little correction on the markets a little bit. So that's where we are. If you want more, you can always find us in our page, winston.capital. And if not, every day, live from New York at 8:30, talking about the markets. Have a great week.